Good afternoon, members and guests and students and teachers of the World Affairs Council. We're delighted to be with you, even if it's not in person. We look to hopefully get back to our in-person events and seeing you all sometime soon. And most importantly, we hope that you all are well, you and your families and friends are doing well in these difficult and complicated times. And to hopefully keep us still informed and up to date with what's going on in the world, we will be continuing to provide information of what's going on in all different parts of the world, whether it be foreign policy or international development, international business, and cultural issues. And today I'm delighted to be joined by longtime New York Times national energy correspondent, Clifford Krauss, and a longtime resident here in Houston, an expert on global energy markets, but also the impacts they have in the United States and more specifically in Texas and Houston here as well. Clifford, could we maybe just start by talking about the thing that probably made headlines for a lot of people with the energy market a few weeks ago was this, quote unquote, price war, what they call the OPEC plus price war, especially between the Saudis and the Russians not being able to agree upon production limits or what would or would not be done. Can you talk about that and what it led to?
Sure. Well, most immediately, that move by the two countries sparked the tumbling price of oil, as everyone knows. But I want to go back just a little bit because I think you have to go back to at least 2014 when OPEC, and it wasn't OPEC plus yet, the Russians were not involved, decided that they were going to let it flow, let the oil flow, bring down the oil price. We all in Houston remember that. Prices came down. The objective was to basically undercut U.S. shale. That did not work for various reasons. And now we're basically back to a very similar situation, plus the coronavirus. So first, OPEC decided we're going to cut production to try to support prices. When the Russians did not go along with that move, then the Saudis and their allies in the Gulf decided, okay, we're just going to let it flow. And there you have, I wouldn't call it exactly a price war. It was basically a competition between Russia and Saudi Arabia for market share, both trying to elbow out the United States and specifically shale.
Okay, so again, you would say, this is, about 6 years later, the dynamics are somewhat different, but at the end of the day, the overbearing policy for both of them was to, in essence, try and punish U.S. shale production and decrease, U.S. production overall. And I suppose, you think it's gone from there? Putin and MBS, Mohammed bin Salman, from what you've heard, were these difficult conversations? Was it complicated? Obviously, Mohammed bin Salman or MBS, in the end, let it go where he wanted to go. But where do you think those conversations went?
Well, I don't know about the intimate conversations. I think that the two leaders have miscalculated. And it would not surprise me if one or the other or both try to find a way out of this, because they're both going to be damaged. And I would argue that they will at least be damaged as much as U.S. production. And you notice I say production as opposed to producers, because some producers will be hurt, but the U.S. production will continue. Perhaps not at the level of 13 million barrels a day of U.S. domestic production, but we have shown resilience in the past, and I believe U.S. production will be resilient in the future. And they have problems. They have fiscal problems. They're more dependent on oil than we are as countries.
And I guess to put it in perspective, roughly if global consumption is around 100 million barrels a day, what the initial kind of decisions by MBS to what did that do with regards to impacting global production levels?
So it could be as much as 5 million barrels a day compared to the policy that OPEC originally wanted to institute. So 5 million barrels a day is quite a bit of oil. But when you consider that the coronavirus is now suppressing up to 20 million barrels a day of oil, really 5 million barrels a day could probably bring the price of oil up maybe $10 from the current price of $20. So that's still not a strong price.
And just to get back to kind of the rationale behind it, at the time, the Russians and Saudis were going through these discussions and decisions to alter production levels. Coronavirus was already making international headlines. It was not a large presence, in the United States or perhaps in Saudi Arabia or Russia at that point. But Chinese economy was already suffering. Chinese demand, I suppose the anticipation for reduced demand for oil was already there. In that way, do you think, especially knowing that at the time coronavirus was already an issue, that this was perhaps a gamble that backfired?
I think so. Now I'm speculating, but I think that the two leaders, as many leaders around the world, underestimated the power of the coronavirus. Alternatively, they might have thought that this impact would be short-lived, and maybe it will be relatively short-lived. I think what the Russians are thinking is that the U.S. production is in a different state than it was in 2014, 2015. And what I mean by that is that Wall Street continued to finance the shale frackers and drillers and producers. They may be thinking that will no longer be the case. And of course, we have seen investors backing away from shale. So that seems to be the gamble. But the Russians have their own weaknesses. They have large fields in Siberia, and they do not have a lot of storage. So if in a month or 2 months or 3 months, that oil gets backed up in the Russian system, then they have to turn off the wells. That could be damaging and or expensive to rehabilitate those wells. And the Russian economy, to a certain extent, depends on the oil price. So they're very vulnerable. I would say that they are more vulnerable than our economy, which is not to say that the Texas economy is not going to go through a tough time.
And you mentioned the Russian complications with regards to these big production changes. How are the Saudis prepared for it? Do they have a bigger capacity for storage or reservoirs, or what are their options?
They have a different problem. They do have storage. We're going to be going into the summer months where they actually consume a lot of oil for their air conditioning and industrial uses. But their problem is they're losing revenues. This has hurt the share price of Saudi Aramco, which we all remember just had its IPO just a few months ago. And it hurts the finances of the kingdom, which are not as strong as they were back in 2014, 2015, when they attempted the first gambit. So I don't know how strong MBS is in the royal family, but there seems to be a tug of war between him and some of his relatives. And so that could be aggravated by this policy as well. So the two situations in Russia and Saudi Arabia are complicated for their respective leaders, but in different ways.
And then bringing it back domestically to kind of U.S. energy companies in general, oil companies, but especially say here in the Houston area, and a lot of our members, are either work directly in the industry or are somewhat affiliated with it. Can you talk about, I suppose, for the last 6 weeks or so, what you've been hearing from your different sources inside a lot of these huge companies and even some of the smaller and more moderate players, and what
Ronan, you cut off there a bit.
Sorry?
You cut off a little bit there.
Okay. Sorry. Yeah, I was saying, so what have you heard from your contacts inside the U.S., oil and gas companies here, especially, those with a big presence here in Houston?
Sure.
For the last few weeks. Did they start off nervous with this kind of Saudi-Russia kind of competition, and then the coronavirus just made it that much more dire?
Yes. Well, I mean, just the suppression of demand is really the number one issue here for the oil companies. And the oil companies are not a monolith on this. You have the integrated companies, the large companies, the Exxon Mobils, ConocoPhillips, Chevron. They have the balance sheets to be able to survive this, although their share prices have gone down and they're under some pressure. But the pressure that they're under does not compare to the pressure that the independents come under. So you have about 70 public traded independents, more or less, and most of them are in trouble. They still have debts. They are going to probably be forced to consolidate, to cut their costs and survive, which could make our energy system and our oil industry stronger in the long run. So there are different things. Now you have some companies that want to constrict U.S. production, but the big companies do not want to do that. And so there are different points of view, but the whole industry, and not just the American industry, globally, is stressed. You have, CapEx is being cut back 25% and more by even the strongest companies. And that's just the beginning. If the coronavirus afflicts us for many more months, I think that we're going to see a lot of wells shut in.
And maybe just for the sake of time, we'll just do maybe two more kind of relatively, not easy questions, but if we can make them relatively brief.
Sure.
You mentioned that just a lot of the estimates by IEA puts the reduction in demand at about 20 million barrels, perhaps 20% of global demand, which is pretty staggering. Where do you see things? I know it's very hard, but maybe 6 months, a year from now, with regards to the overall global oil market.
Wow, I wish I could answer that. I mean, the answer to that question and so many of the questions about where the economy is going, where the markets are going, depend on this virus. When do we get it under control? Does it come back in one form or another in the fall and winter months? And so if we presume, and there's a lot of, I think, the world is coming together on this. We're having the social distancing. There seems to be a lot of medical progress towards coming up with, a vaccine next year and other treatments sooner than that. So let's say we get this thing under control in a few months. I think that we should have demand come back. It may take a little time. That will depend on the economy. That will depend on just how resilient are the chains through which this economy is run, and international trade as well as domestic production. What will be the strength and the balance sheets of individual Americans who lose their jobs? Are they going to be resilient enough to go back to not only work, but spending, going on vacation, taking trips? Some of the airlines are already cutting back their flight schedules for the summer. So they are projecting a slowdown that's going to be fairly lasting, at least into the midterm. So I'm not really answering your question because it's a difficult one.
Well, and I guess realistically speaking, almost no one knows the answer, but thanks
Right.
for your insights. And lastly, you mentioned the U.S. economy. Obviously, Congress and the president has worked on a massive, unprecedented level
Right.
of a financial kind of rescue package of sorts.
Right.
Certain industries, whether it be the airline industry or the cruise industry, they're probably perhaps going to be asking for more money from the government one way or another. The
Right.
fact that it's an election year, Do you think it would be that much more difficult or complicated to have some form of a financial kind of rescue package or stimulus specifically for the energy industries here in the United States, or do you think that's something that might come to pass?
Well, I think that the parties, came together very smartly in Congress on this last package, which went through remarkably quickly. You notice that there's really nothing important in the package that went to the oil industry. The administration made a fairly modest proposal to buy oil and put it into the strategic reserve. I think it was only $3 billion, which is not a lot of money compared to 2.2 trillion, right? And I don't think there were any specific things for either the oil industry nor renewables. What will come in the future, I don't know. There's the possibility of the two parties negotiating, coming up with something. But I will say this, the oil industry is not united on what it wants. Some companies, medium-sized companies, want intervention, and the big companies are saying they want this to be a free market. So they don't have a united front yet. So I don't know what is coming for the industry. I know that the president does not want the oil industry to go under. And as somebody put it recently, it might have been Daniel Yergin, you can bankrupt companies, but those rocks will still be there.
Yeah. Well, that's excellent. Thank you so much, Clifford, and to our great audience thank you for watching this. And we invite you to if you're not doing so already, please follow Clifford and read his great reporting from the New York Times and elsewhere, whatever platforms you might find him on. And please stay tuned to the future programming we look forward to doing. And again, like I said, some point, hopefully when we get back to doing these programs in person, would love to have a nice big regular event with all of you in person with Clifford, and maybe a good discussion of the overall oil industry and where it stands now. Thank you all very much. Please stay safe and wish you all the best. Thank you.
Thank you.